Hi, this is Randy Finney with Right Side of the Chart, and today is Thursday, September 20th, 2018. Just a quick heads up, I'll be leaving town today, and I'll be out of town through Monday, returning back on Monday, but I'll have very little time or access on the computer. I hate to leave the markets now, but I had a trip, take the family down to the Florida Keys for the weekend, extend it, and so pretty much I'll be if I have a cell phone signal, if I'm not too far out offshore, I'll definitely be checking the markets and I'll try to the best of my abilities, post an update or at night when I come back in. So I just wanted to make mention. Tomorrow I will not be in the trading room actively, or Monday at least until late in the day, possibly Monday night. So um, and over the weekend, of course. All right, let's just dive into the charts here, and I want to highlight what I've seen today. That's anything that's changed here. I wanted to point out, and I did point this out in the trading room. Nice impulsive breakout today. This is at level. These are the recent, or this was, I should say, the recent reaction high in the euro U.S. dollar pair. We had a nice impulsive breakout today. We're coming back in right now, but that's fine. You can see how impulsive this move was. I added a second line here. This is a line I highlighted in the trading room earlier in that post because we had this reaction high. But there's also a lot of reactions also right here at this level. You can see all these reactions. That's 117, 144. And then you have an uptrend line as well here. So I'm perfectly fine with the euro if it wants to come back in a little bit and retest that breakout and move on. I'd prefer it, obviously. The sooner it reverses, the better. I'm still bullish on gold, long the miners, long gold futures. Um, but that's all healthy, so to speak. If it cracks that level, maybe another test of 116,582. I really don't want to see that, but I just want to mention so far so good. So breakout's a breakout until unless it fails. So in most breakouts, like I said, come back in. And this level, let's just call it a breakout zone here, resistance zone with these two levels there. So that's okay right now. Euro's looking good, and again, that helps the bigger picture here. There's that downtrend line I have on the daily chart, and you can see that even if I move it up and capture just the top of all the wicks there, it's still a breakout on this more significant daily time frame. It still comes on the heels of this positive divergence, this bear trap move, that flush out move that I talked about, and the recovery of this key level. So check, check, check so far, but there's still a confluence of resistance to take out all these highs here, which I just showed you there. We're kind of testing those now, and then these highs there, and it should be smooth sailing. So the put it plain and simply, the the bullish case for gold continues to firm up, and there's still a little work to be done. Namely, and I've talked about this ad nauseum recently, unless you're new to my analysis, this 1213 level on GC gold futures, super well defined. This is a 60-minute chart, a lot of reactions. And what I mentioned in the trading room today, I actually put up a 1-minute chart showing this rejection there. So the euro broke out, but again, we're not trading the euro. We're trading gold, and I'm watching the euro just as a proxy for the U.S. dollar. That was the euro U.S. dollar pair we're looking at. And amazing. You can see right here, where did gold stop cold today in reverse? 1213 on the button. Hit that level. Technical analysis never fails to amaze me. But the point is, that I made in the trading room is typically, and there are no guarantees in trading, but typically the more reactions that you have on a level, in other words, the better defined a support or resistance level, in this case a resistance level, the better defined it is, usually the more impulsive a breakout will be if we get one. Now we haven't had one yet, but if we do, uh, gold futures have been checked at that level now, going on all the way back to looks like late July there. So a lot of reactions, and again, a lot of pent-up energy if gold can break out. So that, and I still favor that at this point in time, but it hasn't happened yet. There's a minor uptrend line to watch. It would be ideal to see gold hold on to this uptrend line here in reverse. And of course, there's also this downtrend line, which comes in right around the 1213 level. But as I always say, if I have two support or resistance levels that come in close proximity, you give the benefit of the doubt to the latter of the two to break. In other words, trend line break right now, which we got today, doesn't mean much because you have even more significant resistance level right overhead. So that's gold. A little more work to be done, but so far so good. Um, And a quick update on GDX. I think I updated this yesterday, and I mentioned, so good, so far so good. Broke above the 1850, top of that resistance zone, impulsive move, and I had it going here, hitting this trend line and having a reaction. That's the scenario I drew out so far. That's exactly what happened. So, if you're a micro trader, you can trade off these levels. That's where GDX failed. Had two tags at level. It's pulled back a little bit, and can certainly pull back and keep the, the bearish outlook intact. In fact, that was my preferred scenario and still is. So another thrust down, maybe back test this level here. Hard to say exactly where it might go. And again, it's all you have to take it all together. You have to look at the dollar, the euro, or mainly the dollar. Um, the Chinese yuan is another one to watch. That's tracking gold, almost directly. A couple people on the site have pointed that out, so there's another one to watch. And then on GDX here, if you're trying to micromanage a trade, there's a minor uptrend line right here that I just added today. You can see that. And the better. Here's my take on this and gold and everything else. The shallower these pullbacks are at this point, the more bullish that is. It just shows that buyers are stepping in on little pullbacks here. We still haven't had the big breakouts, but you can see here that this 60-minute chart of GDX, that downtrend line, a breakout of that level will roughly align with a breakout of gold because they both reversed, remember, today at the highs. GDX reversed off this, while gold futures reversed off 1213. So there's some key levels, and I think a lot of pent-up energy. So um, I don't like to be dramatic when I talk about trading, but I think the potential for a pretty explosive rally is there, the potential that is. So um, and I've seen it before with GDX and gold. So if they can break out, we could get a pretty quick run. And that's why I went ahead yesterday and extended those targets in advance. Because one thing I can't do and won't do on the site, if we hit the first target and that was still the final target, well, it's going to do me no good, or anybody any good, I should say, anybody else, to add official targets. And of course, these are just suggestions or what I see, way I might trade. And I list multiple targets. You want a few wins under your belt, book profits, partial full at the early targets. If you're a more longer term swinger trend trader, hold out for these. And again, if that bullish case for gold opens up, this can morph into a trend trade. A lot of what I do is swing trading here, but trend trading, a case can be made for a significant bottom in gold. We look at a weekly chart of gold, just not to get, well, it's not off topic. You look at the last time that gold hit oversold, so assuming this bottom back here in 2015 was the end of the big bear market in gold, that, gold topped back in 2011. So just if you go under that assumption, then as I often say, during a bull market, oversold readings are very rare. You usually get one and done. And they don't go much below that 30 level. So the last time we hit 30 on the RSI was right there. In a bear market, oversold tends to become much more oversold and stay oversold for an extended period of time. You have more frequent oversold readings, just like in a bull market. You look at the stock market now, overbought tends to become more overbought, well above that 70 level on the RSI, stays overbought for a while. Overbought readings are frequent, whereas oversold readings are rare. So right now, if we go under the assumption that this was the end of the last bear market, and we're in a new bull market for gold, then this may be a great or one of the best buying opportunities, or the best buying opportunity that is since late 2016, the last time it reached oversold on the RSI. PPO starting to curl up as well. So again, a weekly chart we're looking at, nice clean separation between the lines. We haven't made a bullish cross yet, but if we do, it'd be a confirming signal or confirmation, if you will. And then of course you have a long-term trend line here that I've drawn off the top, and that would do it. And really to put the nail in the coffin and put to bed any question whether gold's in a new bull market or just an extension of the old bear market, maybe just a sideways consolidation period, I think, and this is just GLD, of course, but that, excuse me, guys, 130-ish level, a lot of reactions there, pretty key level, and I think it will be safe to say if and when we get that that gold now, and that's also a pretty powerful basing pattern. You can see there, we've been trading sideways, gosh, all the way back to mid 2013. So a breakout above this basing pattern would be very bullish. Likewise, to the downside would be bearish, but as of now, this is my preferred scenario, and the evidence continues to firm up. Still a little more work to be done, so I'll continue to post frequent updates, and as long as the technicals are there, as long as a case can be made, and if anything changes, I'll also communicate that. All right, now on to the pesky little stock market. Yes, you can hear the frustration in my voice. I mean, we've had this breakdown on QQQ. Again, this is seen better on the daily chart, this trend line, or we can go look at a 2-hour chart here in a minute. Breakdown, back test, back test. We regained it briefly, a little whipsaw signal, fell back below. We're back testing it again. And we're also back testing testing the 184.86 resistance level. Clear those lines out and just show you where those come from. Pretty obvious, but you can see that capped all the advances there. It's capped today's advance so far. We had a reaction there. We had a couple reactions there. So far, and look, anything could happen, but so far I view this as a false breakout. And, we broke out there and fell back down. Um, but point being, we're at resistance. And like I say, resistance is resistance until unless taken out. So you have 184.86, give or take, and then you have that trend line just above. Here's that trend line when we look at it on a little bit longer time frame. It comes off well, on the daily chart, I have it off the early April lows, but there it is. Let's just look at the daily chart for you. That's a little clearer. There it is, this yellow trend line right here. So there it is, breakdown, back test, and we still need to take out this little minor uptrend line. That's QQQ. But as I've been saying, the Qs are not going anywhere without the rest of the market and tech breaking down and Amazon holding on to that breakout. So here's SPY. This is the trend line I've been highlighting on SPY, the S&P 500 tracking ETF. So far, a successful defense of that level, just pushing on up, wedging on higher. So no sell signals yet on SPY. I'm ready to pull the trigger on a QQQ official short trade, but I have to see SPY break, XLK, and here's XLK, the tech sector, like I said. QQQ is not going anywhere without XLK because XLK, which is the technology sector ETF, the tech sector makes up 60% of the NASDAQ 100. So therefore, no breakdown in the tech sector, no breakdown in QQQ, or at least no confirming sell signal on QQQ. We have to give it the benefit of the doubt. So there it is. I mean, lots of defenses and one, two, three, four, numerous candles. Now, of course, that's bullish until and unless this trend line goes. But usually during a healthy advance, there's a couple things. Number one, we're wedging higher, and that's what the divergences tell you, that the momentum is waning, that these rallies, these reactions off the trend line are getting less and less vigorous. The buyers are not stepping in as aggressively as they were. That's the whole nature of a rising wedge or a falling wedge. They're contracting, and it's that price compression, the waning momentum, and eventually you get a trend reversal. This stuff isn't magic. It's just how the markets work. So there it is. There's that trend line. The divergence lines are drawn, but we have to break it. And what I was getting at is too is, as time goes on, during a healthy advance, you come touch a trend line, you usually explode off there. You had this one, you had a few candles hit. Here, about 3 candles or about 4 trading sessions, but you can see we're just hugging that level now, like an exhausted sailor overboard clinging to a lifeboat. It's just kind of tired. Now, yeah, we're up 1%, but in the scheme of things, that's nothing. You look at this bigger picture, up 1% today, down 1% tomorrow, until and unless we see these divergences negated. Or really, there's not a lot I see really, or nothing that would prompt me to chase along here. But on a short, you just have to hold off and be patient. I've already shared my targets there. And let's just look at Amazon. Amazon breakdown and just hugging the trend line. Again, Amazon's not going anywhere because the broad market's not going anywhere. There's a lot of money flowing into SPY today, so that it's going to carry over into Amazon. And as I mentioned, we're seeing the sector rebalancing, biggest sector rebalancing in decades with the S&P. Amazon's being thrown out of one sector and included into another. There's going to be tremendous amount of shares being bought and sold. So, you may get a few more whipsaw signals. So that whipsaw signal, QQQ may be a whipsaw signal. This may be a whipsaw signal. We need to see some convincing sell signals here. With that being said, I want to just say this. I added IWM as a short yesterday, and I said this in the trading room. I'm not happy the fact that we did take out, as I wanted to see, this yellow benefit of the doubt trend line taken out, which it was intraday, and I wanted to see that low from Monday taken out, which was 169.35. It was yesterday. This is yesterday's candle. But we snap back, and you can see that's TA for you. I don't know if you can hear. This is that benefit of the doubt trend line, the lower one. It probably doesn't show well in the video. So there it is. Closed right up on the thing. Now we're back above it. So that is, for now, a false breakdown. But I'll say this. I still very much like when I look at this pattern, I still believe a breakdown is imminent. It hasn't happened yet. Yeah, kind of jumped the gun on that one yesterday. Maybe should have waited for the daily close, but I'm fine with it. In fact, I was already short the Qs, and I took a starter short in RTY, which is the IW, the Russell 2000 futures. So I actually shorted this bounce. I think a breakdown's imminent, and I'll I haven't yet set my stop, and I'm going to do that before I leave town today. And just want to say that looks good, as does MDY. I mean, this is just a clean rising wedge pattern. You can see it. Price compression, very well-defined trend line. As I said earlier, the more reactions you have on a trend line, the more significant it is. So when you get a break, and there's those, this is why, it's usually preferable. And in hindsight, maybe I should have waited till we had some more confirming evidence. But I wanted to get that one out there on IWM and MDY. These are, by the way, guys, mid-cap stocks. If I didn't mention it, I see this a very similar pattern. And I think once this breaks, you'll see IWM break. You'll see SPY follow maybe soon thereafter. When you see tech break, I think you'll start to see a waterfall sell-off. I think it's coming, and that's the trend line. But we need to take that trend line out. In other words, it's not yet. We don't have a sell signal. We only have a bearish setup right now, not a trade on MDY. But you can see what happened last time. We had a divergent high right here, negative divergence, broke trend, and you can see this is what I talk about, a waterfall sell-off. Stocks usually fall faster than they rise, so that's what we had back there earlier in the year. And I posted this today in the trading room as well. This is a CBOE skew index, which works similar to the way the VIX does, although the VIX is measuring short-term puts and calls. This is in the money, I'm sorry, closer to in the money puts and calls, where this is measuring out of the money puts and calls. You can read up about it. I'm not going to spend 5 minutes explaining it in the video. The website is cboe.com, or just type in CBOE skew, and it'll tell you here that I also posted a link to the definition from investopedia.com, gives you a little more clarity. But basically, it runs between 100 and 150 usually, 150 being the high end that's pricing in an increased risk of a black swan event. And it's rare. We just hit that reading the other day. We're just coming off it now. We abated slightly. I think skew right now you can see here, I don't know, it's 145 or so after hitting that 150 mark. This is just the moving average here, or 200-day moving average. The light blue lines you can see right there actually looks like it hit about 160 or so. And this goes back to 1990. You can see here that skew spiked back before the dot-com bubble burst in 2000. It started getting elevated right up here before the market top in 2008, and it's really telling us some things right now. So like anything else, and I did a post once back a couple years ago about using hurricane or tornado warnings versus watches. So I might warn of potential bearish developments and these kind of things, and that's just a warning. A watch is on alert. If you have I live in Florida, hurricane warnings, you get them all the time. I'm sorry, hurricane watch just means one may be headed your way, and the odds are probably 1 in 1,000 if you're going to have a direct hit or be impacted once you get that, or maybe a little less than 1 in 1,000. I should clarify that. But hurricane watch means you better get out. There's a good chance it's going to hit. So that's right now. Let's just say these are all warnings in the market. We start breaking trend, we start moving lower, then you get your sell signals, and then you get an increased chance you're going to see stocks continue to slide. Until then, we can move up, up, up. As long as we have divergences, as long as the skew is elevated, as long as sentiment is crazy, you see stocks like Tilray running up, insane amounts. There's a lot of speculation and complacency in this market right now, and that's part of what this reflects. So I just wanted to point that out. And one other thing to update as far as trade ideas, last couple of months have been pretty actively swing trading crude, but very actively swing trading. Usually these are trades that either day trades or they're swing trades that may only last, they have only lasted typically a few days, not more than a week or so. So I haven't posted these as official trade ideas on the front page. It's just too fast for most folks at work. Don't do this full time. And those that have the time are usually in the trading room, but I'll throw this out there, whether you've been in the trading room today or not. I posted this morning, about 3 hours ago. Crude futures and USO are setting up for the next short trade on this divergent high. Here's the November crude futures. There's the divergent high I was showing, and mentioned followed up with this target here, first target, and then maybe come down to this trend line. Probably get another reaction off that trend line. So I expect a reaction both at that level there. That's around, oh gosh, I'll look at the chart here in a second. This chart, I didn't write the level. And then that trend line there. Again, that's down the November contracts. Let me see if I have those up right now. Hold on. Before I get to that, the next chart there was USO showing the same thing. USO is one of the more popular non-leveraged crude ETNs, divergent high one. And you see, these are the corrections in swing trade, these long and short. And we've had divergent lows or pullbacks to support. I like the futures because you get that what I call X-ray vision. You're seeing the trades going around the clock. Crude's trading virtually around the clock. USO is only trading 9:30 to 4, at least on the charts, regular session. But then that's why you get all these gaps in USO or any of the commodity tracking ETNs. But there it is, similar structure. So maybe move down there to about 1467 reaction. Give this wedge maybe a little more time to develop, and then that may open the door for a nice swing trade to the downside soon. But again, there's what I call micro or active swing trading ops within there, and yeah, so after that, okay, there it is. I followed up that first target, the dotted line, is right around 70, so maybe cover just a little bit above there. If you want a quick profits, about a 1 point drop in crude, be about 1.1, almost 1.5%. Then I followed up with this chart after that initial post. We're up here. We had that when I first posted. We had initial thrust down. Mentioned this resistance just under 71, offering another objective short entry with a stop right up here above this high around 70.30. And let's take a look at what happened since then. Here it is. That line was right here. I had added it after the fact. There it was. And you can see there was our bounce. So we nailed that one. Nice entry. If anyone caught it, that was an objective short entry. Again, you short there, you can have a tight stop or you can have a stop above here. But so far, a nice reversal in crude. And that's the kind of stuff that I post in the day trading group or swing trading group in the trading room as for active trades. And um, sometimes by the time you might read it, it might be a little late. On the first one I posted when we were up here, we had this initial swoon down, but there was a second objective entry. And so now so far so good. And I still think we go down a little more to that, at least that first target I told you about, just above 70 before a reaction. And then quickly, here it is. There it is, right around 70 or so. You can see the reactions right here on this. And again, these are the November contracts right now on CL that I'm looking at on this chart. And there's your divergent high right there. So, and of course, if we smash through there, expect at least a minor reaction. This is where we probably get a even better reaction there on the first tag of this trend line that we get from this point, and then maybe go on to break that wedge eventually. Okay, we'll wrap it up here. Just to loop back around to the broad market, since I didn't touch on SPY. I know some might prefer trading SPY, or again, you always like to keep an eye on what SPY is doing, even if trading QQQ or IWM or anything else like that. We have the new high in the S&P 500 today with a gap up, and you can see it's a divergent high. It doesn't mean that you have to reverse. It just means I don't chase new highs that are on have negative divergence, because you have a considerably higher rate of failure on the breakout. And you can see down low the divergence lines right here. It's pretty clear as we, continue to inch on up. And that also, because we have this gap up today, and that'll also show on a daily. You'd have a daily. This is a 60-minute chart, but you'd also have a candlestick with a gap below it. Here's your gap. That sets a potential next week, if they can hold these gains today, or park it somewhere up in this range, it sets up the potential. Again, it's only the potential for an island top. An island top is when you have a single candlestick and then you have a gap on one side, gap up at the end, only at the end of an extended uptrend. That's why you don't really pay much attention if it comes in the middle of a trend, but at the highs, there are potential topping patterns. So again, it's only potential. So we'd have to, close somewhere in there and then gap down on Monday if that happens, and that could set up a nice reversal. I find these to be one of the better, more reliable chart patterns. There's not any single candlestick pattern or any chart pattern in the world that has 100% success, but these are some of the more reliable ones. And so if we don't get island cluster top on Monday. Let's say we trade for a couple more days. Let me go to a daily chart here and look at that candlestick. Hold on. Okay, here it is. This is a daily chart zoomed in a little bit of the SPY. So here's our candlestick all alone by itself up here. At this late stage in the rally, I wouldn't call this a breakaway gap. It's probably more closer to an exhaustion gap, but we'll see. And again, gaps happen, and if you follow up, then that's bullish. It was a gap right here. So just because we gapped up doesn't mean anything. But again, be on watch. And another possibility, if we don't gap down Monday, if we have a few more candles around in that range, give or take, that sets up what we call the potential for an island cluster top. That's a cluster instead of a single candle. You have a cluster candles. And again, the confirming candle is a gap down below the cluster. So it's basically the cluster is separated by those two gaps, and those again are pretty fairly reliable reversal patterns. But it's just a potential one thing to watch, not even remotely close to sell signal. If we got that, if it did happen, then you look for a red candle. You want to see a red close below there. Or the easiest strategy, I'll just say it right out. You just when you get that gap down, whether it's a single candle or multiple, it's what I love about these is the risk reward is excellent, because if you get the gap down on Monday, let's say, you short and you simply put a stop just a little bit above the bottom of the gap. If we move up, especially on a closing basis, back up above the bottom of the, in other words, we backfill the gap and then some, then you don't have an island cluster top. So you can set a really tight stop. Your risk reward, you're talking 1% or less loss for what could be the potential of 5, 10 more percent on the downside if you happen to catch that top. So, trading's all about statistics and probabilities, and you can have 5 losses on this type of trading, this pattern, and only hit 1 win, and you're still going to come out ahead. So it's a numbers game. So that's it. We'll watch out for that, and if anything happens, again, I'm not going to be around on Monday, but if I have access to a cell phone or computer at any point in the day and I see something significant, I'll make a point to get on there and post an update. And this has been Randy Finney with Right Side of the Chart. I hope you enjoyed it.